Welcome to our exploration of economic trends and their far-reaching impact. Economic trends are patterns and movements in the economy that influence everything from business decisions to personal finance. Understanding these trends is crucial for making informed choices, whether you're an entrepreneur, investor, or simply curious about how the world works. In this video, we'll break down what economic trends are, why they matter, and how they shape our daily lives. We'll also look at real-world examples and discuss how to interpret economic data. Let's begin by defining what we mean by economic trends and setting the stage for our journey. Economic trends refer to the general direction in which an economy is moving over a period of time. These trends can be upward, downward, or stable, and are often measured using indicators like GDP growth, unemployment rates, inflation, and consumer spending. By analyzing these indicators, economists and policymakers can predict future movements and make decisions that affect millions. Recognizing the signs of economic trends helps businesses plan for expansion or contraction, and individuals adjust their financial strategies. Let's delve deeper into the key indicators that signal economic trends. Gross domestic product, or GDP, is one of the most important indicators of economic health. It measures the total value of goods and services produced within a country. When GDP is rising, it signals economic growth, which often leads to higher employment and increased consumer confidence. Conversely, a declining GDP can indicate recession or economic slowdown. Businesses and governments closely monitor GDP trends to guide their strategies and policy. Understanding GDP growth helps us grasp the bigger picture of economic performance and its implications for society. Employment rates are another crucial economic indicator. High unemployment often signals economic distress, while low unemployment suggests a thriving economy. These rates affect consumer spending, business investment, and government policy. When unemployment rises, people have less money to spend, which can slow down economic growth. Conversely, low unemployment boosts confidence in spending. Tracking unemployment trends helps us understand the labor market and predict future economic conditions. Inflation refers to the rate at which prices for goods and services rise. Moderate inflation is normal and can indicate a healthy economy, but high inflation erodes purchasing power and can lead to instability. Central banks use monetary policy to control inflation, aiming for a balance that supports growth without causing hardship. Understanding inflation trends is vital for businesses setting prices and individuals planning their budgets. Let's explore how inflation impacts everyday life and economic stability. Consumer spending is a major driver of economic growth. When people feel confident about their finances, they spend more, fueling business expansion and job creation. Conversely, when uncertainty rises, spending drops, which can slow down the economy. Tracking consumer spending trends helps businesses anticipate demand and governments plan economic policies. These patterns reveal much about the public's confidence and the overall health of the economy. Business investment is a key indicator of economic optimism. When companies invest in new equipment, technology, or facilities, it signals confidence in future growth. Investment trends can be influenced by interest rates, government policies, and global events. High levels of investment often lead to job creation and innovation, while low investment can signal caution or uncertainty. Understanding these trends helps us gauge the business climate and predict future economic performance. Interest rates play a pivotal role in economic trends. When rates are low, borrowing becomes cheaper, encouraging businesses and consumers to invest and spend. High interest rates, on the other hand, can slow down economic activity by making loans more expensive. Central banks adjust interest rates to manage inflation and stimulate growth. Monitoring interest rate trends helps us understand the cost of borrowing and its impact on the economy. Economic trends are not limited to one country. Global events such as trade agreements, geopolitical tensions, and pandemics can have widespread effects. International trade, currency exchange rates, and global supply chains all contribute to economic trends. Understanding these influences helps us see the interconnectedness of economies and anticipate changes that may affect local markets. Let's examine how global factors shape economic trends. Advancements in technology and innovation drive economic growth and shape trends. New inventions, digital transformation, and automation can boost productivity and create new industries. Businesses that embrace technology often gain a competitive edge, while those that lag behind may struggle. Tracking technology trends helps us understand future opportunities and challenges in the economy. Demographic changes, such as aging populations or migration, influence economic trends. These shifts affect labor markets, consumer preferences, and government spending. For example, an aging population may increase demand for healthcare and retirement services, while migration can boost workforce diversity. Understanding demographic trends helps policymakers and businesses plan for the future. Government policies, such as tax changes, regulations, and stimulus programs, can significantly influence economic trends. Policies that encourage investment and innovation often lead to growth, while restrictive measures may slow down activity. Understanding how government actions affect the economy helps us anticipate changes and adapt accordingly. Consumer Confidence Index measures how optimistic people are about the economy. High confidence usually leads to increased spending and investment, while low confidence can cause caution and reduced activity. Businesses and policymakers use this index to gauge public sentiment and plan accordingly. Understanding consumer confidence helps us predict economic movements. Stock market reflects investor sentiment and economic expectations. Rising markets often signal optimism and growth, while falling markets can indicate uncertainty or recession. Stock trends are influenced by corporate earnings, global events, and economic indicators. Monitoring stock market movements helps investors and businesses make informed decisions. Housing market is a major component of the economy. Trends in home prices, sales, and construction reflect broader economic conditions. Rising prices and sales often indicate growth, while declines can signal caution. Housing market data helps us understand consumer confidence, investment, and the health of the economy. Trade balance measures the difference between a country's exports and imports. A positive balance means more exports than imports, which can boost economic growth. Negative trade balances may indicate reliance on foreign goods and potential economic challenges. Understanding trade balance trends helps us assess a country's economic strength and global competitiveness. Currency exchange rates affect international trade and investment. Strong currencies make imports cheaper but can hurt exports, while weak currencies boost exports but raise import costs. Exchange rate trends are influenced by economic indicators, government policy, and global events. Monitoring these rates helps businesses and investors manage risks and opportunities. Supply chains connect producers, suppliers, and consumers. Disruptions such as natural disasters or geopolitical events can impact economic trends by causing shortages and price increases. Businesses must adapt quickly to maintain operations and meet demand. Understanding supply chain dynamics helps us anticipate challenges and find solutions. Energy markets, including oil, gas, and renewables, play a vital role in economic trends. Price fluctuations can affect transportation, manufacturing, and consumer costs. Global events, technological advances, and policy changes all influence energy markets. Tracking these trends helps us understand their impact on the broader economy. Environmental issues such as climate change and resource scarcity increasingly shape economic trends. Businesses and governments are adapting by investing in sustainable practices and green technologies. These changes can create new opportunities and challenges, influencing everything from job markets to consumer preferences. Understanding environmental trends is essential for future planning. Income inequality refers to the gap between the rich and poor. Rising inequality can lead to social unrest and affect economic stability. Governments and organizations track inequality trends to address challenges and promote inclusive growth. Understanding these patterns helps us create policies that support fairness and prosperity. The labor market evolves with economic trends. Automation, remote work, and changing skill demands influence employment opportunities. Businesses and workers must adapt to new realities such as flexible schedules and digital skills. Understanding labor market trends helps us prepare for the future of work. Consumer Price Index (CPI) measures changes in the prices of goods and services. It's a key indicator of inflation and purchasing power. Rising CPI means higher costs for consumers, while stable or falling CPI can signal economic stability. Businesses and policymakers use CPI data to make decisions and plan for the future. Retail sales reflect consumer demand and economic health. Rising sales often indicate confidence and growth, while declines can signal caution. Businesses monitor retail trends to adjust inventory and marketing strategies. Understanding retail sales helps us gauge the mood of the economy and predict future movements. Manufacturing output is a key driver of economic growth. High production levels signal strong demand and healthy business activity. Declines in output can indicate economic challenges or shifts in consumer preferences. Tracking manufacturing trends helps us understand the state of industry and its impact on the economy. Financial markets, including stocks, bonds, and commodities, reflect economic trends and investor sentiment. Market movements are influenced by economic indicators, global events, and policy changes. Understanding financial markets helps us make informed investment decisions and anticipate economic shifts. Savings and investment rates reveal how much people and businesses are setting aside for the future. High savings can indicate caution, while high investment signals optimism. These rates are influenced by economic conditions, interest rates, and government policy. Monitoring savings and investment trends helps us understand economic confidence and future growth. Public debt refers to the money governments borrow to fund operations and projects. Rising debt can signal investment in growth, but excessive debt may lead to financial challenges. Understanding public debt trends helps us assess government stability and the potential impact on economic performance. Monetary policy involves actions by central banks to control money supply and interest rates. These policies influence inflation, employment, and economic growth. By adjusting rates and managing liquidity, central banks aim to maintain stability and support prosperity. Understanding monetary policy trends helps us anticipate changes in the economy. Fiscal policy refers to government decisions on spending and taxation. These choices impact economic growth, employment, and public services. Expansionary fiscal policy can stimulate growth, while contractionary measures may slow down activity. Monitoring fiscal policy trends helps us understand government priorities and their effects on the economy. Emerging markets are countries experiencing rapid growth and industrialization. These economies offer new opportunities but also face unique challenges, such as political instability and infrastructure gaps. Understanding emerging market trends helps investors and businesses identify risks and rewards in global expansion. Recessions are periods of economic decline. Indicators include falling GDP, rising unemployment, and declining consumer confidence. Recognizing these signs early helps businesses and policymakers take action to mitigate impacts. Understanding recession trends is essential for planning and resilience. Economic recovery follows periods of decline. Recovery phases include rising GDP, job creation, and renewed consumer confidence. Businesses and governments play a vital role in supporting recovery through investment and policy measures. Understanding recovery trends helps us anticipate opportunities and challenges. Economies often experience cycles of boom and bust. Booms are periods of rapid growth, while busts involve decline and contraction. These cycles are influenced by various factors, including policy, consumer behavior, and global events. Understanding boom and bust trends helps us prepare for fluctuations and manage risks. Long-term economic growth is driven by innovation, investment, and productivity improvements. Sustained growth leads to higher living standards and prosperity. Tracking long-term trends helps us understand the factors that support stability and progress in the economy. Short-term economic fluctuations are often caused by unexpected events, such as natural disasters or policy changes. These movements can impact markets, employment, and consumer confidence. Understanding short-term trends helps us respond quickly and adapt to changing conditions. Predicting economic trends involves analyzing data, indicators, and expert opinions. While forecasts are not always accurate, they provide valuable insights for planning and decision-making. Businesses, investors, and governments rely on predictions to set strategies and manage risks. Data analysis is essential for understanding economic trends. Techniques include statistical modeling, forecasting, and scenario planning. By interpreting data accurately, we can identify patterns and anticipate changes. Businesses and policymakers use these techniques to make informed decisions. Economists study trends, analyze data, and provide guidance on policy and business decisions. Their expertise helps us understand complex economic issues and anticipate future developments. Economists play a vital role in shaping strategies and supporting growth. Economic trends directly affect businesses. Changes in demand, costs, and regulations influence profitability and growth. Companies must adapt to evolving conditions by adjusting strategies, investing in innovation, and managing risks. Understanding economic trends helps businesses thrive in a dynamic environment. Economic trends influence personal finances, job opportunities, and lifestyle choices. Individuals must stay informed to make wise decisions about spending, saving, and investing. Understanding these trends empowers people to navigate uncertainty and achieve their goals. Economic trends affect society as a whole, influencing public services, social stability, and quality of life. Governments and organizations must respond to changing conditions to support communities and promote well-being. Understanding societal impacts helps us build a more resilient and prosperous future. Adapting to economic change is essential for success. Businesses, individuals, and governments must stay flexible and proactive. Strategies include continuous learning, innovation, and collaboration. By embracing change, we can turn challenges into opportunities and thrive in a shifting landscape. The future of economic trends is shaped by technology, globalization, and shifting demographics. Staying informed and adaptable will be key to navigating upcoming changes. By understanding the forces at play, we can prepare for new opportunities and challenges, ensuring continued growth and prosperity. In summary, economic trends are powerful forces that shape our world. By understanding key indicators, influences, and impacts, we can make informed decisions and adapt to change. Whether you're a business leader, investor, or individual, staying aware of economic trends is essential for success. Thank you for joining us on this journey through the impact of economic trends.